So let's take a look at today's price action, and I think unless there are any questions, that'll run us through the time. And let's see. So again, my clock here is set for California time, Pacific time, and so the start time here is 6:30 on the clock, or on the time scale here. That's going to be your 9 o'clock or 9:30 Eastern. We start the day off. We have, let me clear some of this stuff off. We have a green bar, or we had a red bar, or not red bar. We had a signal here with prices going lower. We had resistance above. Resistance when we started the day off was at the 2083.5, and prices just go up right into it. So open up, market starts higher, going against a downtrend. We get a buy signal here. It's basically right on the resistance, and as we always say, we could see the trade run away, and that's actually what we see in today's example. Prices run away off through that, but typically we'd like for a trade to pull back, come into the support, and that's just a better risk and reward trade. So here in today's example, prices just run away, and they get up about 8 points before they start to pull back. Here they're starting to test, so the risk and reward is considerably better, but prices close down through, right? Close down through and put in a lower high here. Now we see the sell signal here. The sell signal, this is in the short run, is going to start lower toward where we have support. Now, what was this line that I have here? All right, well, I'm going to remove this line here. I know this actually comes into play later, but without the benefit of hindsight, obviously, we would see a sell signal here, but we do have the guidance support down below at the 2086. So it's really only about, again, like 2.25 points down into support, basically on the lows here. So if we take a look here, not even just looking at the support, but looking at here, we have the low at the 2087.5, and if we're looking at a new short position coming in here at the 2088.25, it's only 3/4 of a point to get into that point, before the position has to sort of prove itself. It's not enough time for the dots to really come down at all. And so that makes for sort of a worse sort of trade setup. And you can see here how by the time prices get to the dots still up here. Not enough room, not enough time, not enough sort of price action for the dots to be able to get down. You kind of see that at the start of the trade. It's not a perfect sort of way to do it, but as you kind of look at the signals, if we can see there's, prices are very close to the dots, and there's far away from the big dots, then you've got some room for prices to get there, and potentially the trade could actually get to break even or a scratch or become de-risked by the time prices get there. And except to see the dots moving down, and you see, continued period of testing here, pretty quiet. And then here we get prices start actually breaking through. This is sort of our sweet spot. So as prices had finished or was testing for, actually quite a long period of time. So we can see here from 8 o'clock Pacific time, 11 o'clock Eastern, about lunchtime, right, going through till around, what is this, 10 o'clock? So that's going to be 1 o'clock Eastern, right? So you have this period of time where prices are just flat. They're kind of testing at the support. Basically, it's right down to that point. So we do actually see validation of support here. So if I took these dots off and we were to draw where support was, that's just about where we draw it. And we would have had this point here an hour before prices even started really pulling back to it. Even when prices were still going higher, that's where we define that point. Now, we did see validation of that point. We see here how prices actually looked like they were breaking out, right, to the downside. Again, if we weren't seeing, the support there, it would have looked like here prices made a low at the 2086.25, and here prices broke that low by 1/4 point. So one tick. And bounce off, and then giving us that buy signal, going to go ahead and try to get the continuation of this uptrend, particularly on a day where following up from the strength of yesterday and strength in the start of the day. This seems like a pretty good, fairly good trade setup. So we could be looking for this trade to actually go. We see here the dots moving up pretty quickly, and the risk is basically out of the trade depending on how quickly you could have gotten into the position. And it runs out, right? So we see the sell signal here. So that's where we would recognize that we have a choppy day. We have the top of the range, we have the bottom of the range, we have a sell signal that failed to continue down, we have a buy signal that actually was a sweet spot trade that failed to continue up short of the high, and basically we just had the top and the bottom, and we see the sell signal. Sell signal goes against the major trend direction, not really a great setup. See here how, regardless of the risk and reward, it actually goes, well, regardless of our rules for not taking the trade against the major trend direction, the risk and reward is not there, in addition to it being a choppy day. So, very, very, few reasons why you'd want to go for a short position here. And then the buy signal here, just being shy of the highs. If we're looking at here, the close at 2091, we have the high of the day here at just 1 point higher. So, not a lot of room for prices to go. And prices get there, actually touch the high, 2092, and kind of goes back down into support, breaks it slightly, comes down to the lower end of where we had observed, and that happens to be basically the rest of the day, right? So, from this point on, where we can draw this line, from this point on, we basically wrote to ourselves, don't trade this period of time, and that's effectively what happened.